Hi, welcome to Focus on Finance. I'm your host, Melanie Parker. This show is brought to you by the Consumer Education Division of the Right Legacy Group. Speaking of which, we have the boss man himself, managing member of the Right Legacy Group, Mr. William Steve Wright, here with us today. Welcome, Steve.
Well, thank you.
All right, we're going to talk money.
Yeah, we're going to talk money.
Your favorite subject, right?
well, there's other things I like to talk about too, other than money.
Yes. 9 to 5, Monday through Friday.
All right.
Yeah.
Basically, what we need to discuss is that the IRS, as you well may know, has extended the tax filing deadline from April 15th to May 17th.
Right, which is a good thing for tax preparers, right?
It's a good thing for many reasons, and we're going to talk about some opportunities that this leads to. Okay. But let's get a little background, a little history here, basically. Why May 17th? That seems an odd day.
It is. It does.
Well, normally they extended it 30 days, technically to May 15th. However, May 15th is a Saturday.
Oh, okay.
So because it falls on a weekend, the next business day is May 17th.
Everybody needs that last-minute push.
On
a Monday at that, yes.
So basically May 17th. So that gives you essentially an extra 4 weeks or 30 days to wrap up your tax filings. So why the delay? Why did it push out? Well, a couple of reasons. The IRS finally admitted a couple of weeks ago that they are still dealing with a backlog of roughly 24 million tax filings from 2019.
Really?
That have not been processed.
Wow.
Tax filings from 2019. So they're behind.
What caused that? Did it have to do with all the stimulus checks going out?
No, it actually had to do with the fact that last year during 2020, because of the pandemic, the tax filing deadline was extended to July 15th.
Right.
So that pushed it back further.
Golly.
And then any year, even this year, you can file an extension to April 15th. Excuse me, October 15th.
Gotcha.
So if a lot of people did a defer extension, then they're just now getting processed through the system and everything. So they have a backlog, and because of that backlog, they didn't start the 2020 tax season till 2 weeks later than normal.
So once you do one little pushback, it's a domino effect, isn't it?
Yeah.
Poor IRS.
Well,
yikes.
Well. So they pushed back when you could file 2 weeks instead of the end of January to like February 12th. But also they are dealing with some very outdated software and systems, which takes upgrading and things like that.
Yeah.
And so it created, like I said, a domino effect on it there. And still, many people, we're still in the midst of winding down this COVID and everything, having trouble getting with prepares and things like this. So they thought they'd give an extra 30 days to file. Okay, so that's a good thing for many people. However, CPAs and tax preparers I talked to, they really didn't like it.
Really?
Well, because their tax season got drug on for 7 months, 6.5 months last year, all the way to July 15th. And people procrastinated and waited till the end to file. They were hoping to kind of get this tax season, the bulk of it, 90-some% of it over by April 15th.
Sure.
And then there's always those that file extensions to October 15th, things of that nature. So the extra 30 days was kind of a mixed blessing.
Yeah, I can see that. I didn't see it from that angle.
Yeah, so they wanted to kind of get this over because most CPAs and tax preparers also do regular business accounting. And payroll and monthly statements and financial statements for business stuff. So they're trying to get this section of their year done and continue on. Right. Okay. Now the another reason why they extended it is the $1.3 trillion stimulus package that was passed just in mid-March threw a kind of a monkey wrench into the filings for last year. Many people, because of the pandemic, collected unemployment insurance. Okay. Well, unemployment insurance that you receive, which is technically from the state of Kentucky, that unemployment insurance is taxable as income.
Okay.
Many people don't realize that.
Right.
And so...
Did they have the choice when they filed to have taxes taken out when they filed?
I don't know. I've been blessed in my life to never collect unemployment.
Right.
I don't know.
That's good. That's a good thing.
To be honest.
Yeah.
But
either way, they're going to get you.
Yeah. But in March, when they passed this package, it had a provision in there that said if your household income when you file your taxes is $150,000, less than $150,000, that the first $10,200 of unemployment benefits received is tax exempt.
And that's huge.
That's huge.
Yes. And I know people that directly affected in a good way, yes.
However, many individuals had already filed their taxes for 2020
It's
before they
complicated.
exempt you, and now they could have taken advantage of that.
Sure.
Okay, so what the IRS has said, and it's kind of a technical term here, that if you had already filed your taxes and you didn't get to deduct the $10,200 from your income, not to do what's called an amended return, because those amended returns have to be reviewed individually, and it takes longer. The IRS is saying, and I've talked to several CPAs here locally, that they're going to correct it themselves. Don't do anything, just wait.
Okay.
And they hope to start sending corrections and things out after this May 17th
Sure. It's
deadline.
like, don't do anything. We got this.
Yeah.
We will handle it.
Yeah.
Gotcha.
But then there's a bit of a strategy here. Let's say, remember it said if you're filing taxes and your return is less than $150,000 income, if you file as husband and wife a joint return, which most people do, and let's say that their income was $160,000.
Right.
All right. Well, and they both received some unemployment benefit for part of the year last year. Well, if they file as married filing jointly, they would be ineligible to claim that first $10,200 of unemployment benefit as tax deduction. See, for a married couple, it's double that, $20,400.
Right.
So in this case, it may be wise to refile what's called a corrected return, where the husband files married filing separately. So maybe the husband had $100,000 income, she had $60,000. Now when they file separately, they're under that $150,000 threshold, and they get to deduct their unemployment up to $10,200 of unemployment benefits. So that's one strategy you might want to get back. That would be a situation you would want to file a corrected return in order to take care of that benefit there.
Oh, yeah, definitely.
Now, the one thing that has tripped a lot of people up, though, this extension meant to file for 2020 tax returns. It did not extend the time you have to pay your first quarterly estimated payments for 2021.
Gotcha. For like independent contractors, 1099 people,
And
those
businesses.
folks. Gotcha.
Stuff. So
gotcha.
if you had your first quarterly payments due April 15th, no matter what.
Okay.
Okay. They didn't extend that. The problem is your first quarterly estimate is based on the taxes you owed for 2020. And if you haven't filed your 2020, you're not quite sure what to pay for your first estimate. Okay. So one possible strategy, if you wait till May 17th to get your 2020 taxes done and you haven't made your first quarterly payment, the IRS does assess a 3% annual penalty. So, and it's assessed monthly. So just a quick example to tell you what would cost you if you delay. Let's say that your quarterly payment was $10,000, you owe $10,000. Well, if you wait a month on $10,000, basically the penalty is $25. Okay.
Yeah.
All right. So if you wait until you get your taxes done by May 17th, you realize what you need to pay quarterly, you pay it late, there will be a little bit of an interest penalty for that.
Okay.
But what you got to remember now as independent contractors and stuff is the second quarter of 2021 estimated payment is due June 15th. So right away.
It's right there.
You're
yes.
a month later. So keep that in mind as you're doing your cash flow.
Is that the way it always is?
Yeah.
Really?
Your quarterly payments are always due April 15th, June 15th, September 15th.
Well, that's deceiving quarterly.
Well, and actually January 15th for the fourth quarter of the year, stuff like that. So there's a few twists and turns there to be aware of, but you have time to go through. And quite honestly, if you're due a refund or think you will be, why wait? I mean, go ahead.
Yeah.
Now, my theory, if you're owed a refund, is to tell them to keep it. And then you're ahead for next year.
Right.
Just my theory. That way, you know you're ahead of the game, and you might be able to not pay quite as much this year.
That makes sense. Yeah,
they've got it anyway.
Yeah, and maybe the younger folks with the kids at home probably are not in position to do that, but us seasoned folks, why not?
Yeah, it may be.
Yeah.
And then it comes up the question, okay, so I've done it. I owe taxes. Oh, what am I going to do? What if I owe?
Said that many
bad news, right?
Yeah.
Well, file your taxes whether you pay or not. Don't ignore them.
Right.
Okay, file your taxes.
Yeah, do not stick your head in that sand. Yes.
And when you do file your taxes, send something in, $10, $50, to show good intent.
Good
Say,
faith,
hey,
good faith payment.
it doesn't have to be full amount. Just say, hey, this is what I can come up with right
This
now.
is what I got. Yeah.
The third, which is not preferable, I mean, and if it's a large amount, be proactive and call them. Say, hey, there's a situation. I owe you $1,500.
Yeah.
I sent it $100. What can we work out for the remaining $1,400? Can I get a payment plan, something like that?
Sure.
And they'll work with you.
They will. Yes, absolutely.
The third option is it's not really the best, but if you do nothing, you wait until you get the letter from the IRS.
And you will.
You will. But that letter could come months.
Right.
And you're accumulating penalties and interest. Once you get that letter, you better get on the phone and contact them. The simple monthly installment, or if you have saved and got the money to pay it, work it out from there. So kind of keep that in mind there.
Absolutely.
Right. So let's talk about the opportunity. So what does it mean?
Opportunity, that's a good word.
I mean,
especially with the IRS. Yes.
By having an extra 30 days, what does that mean? Well, the good news means that now you have until May 17th to fund your traditional IRA account, a Roth IRA, or your health savings account backwards to count for 2020.
Right.
So, okay, Steve, so traditional IRA account means that you get a tax deduction for the year you put the money in. So if you max out, if you're under age 50 and you put the max of $6,000 into a traditional IRA account, you can do that for backwards to 2020, and it reduces your taxable income. It reduces your income by $6,000.
Nice.
Okay? So let's take an example. Say you're in the 22% tax bracket. Well, for every $1,000 you put into your IRA account, you're going to reduce your taxes by $220 roughly.
Okay.
Pretty good deal.
Yeah,
now, we're in the business of growing money for people, but I can't guarantee a 22% return on your money.
No.
Okay?
No.
That's
You're
a good
good,
deal.
but you're not that good. Yeah.
Well, I'm just saying,
Right.
I'm saying, so the idea is you're going to get a tax deduction. You're going to reduce your taxes or increase your refund by funding your IRA, traditional IRA.
Nice.
So when you're working with a tax preparer in person and even online, you need to run the calculation if you have not put any money into your traditional IRA account, or you haven't funded it to the max of $6,000, age 50 and under, or $7,000 if you're over age 50. Run the calculation, see, all right, I put 4 in, but if I put in that extra 2, what does that do for me tax-wise? So you got extra 30 days to fund that.
Okay.
Reduce your taxes or increase your refund.
Sure.
Now, so a traditional IRA has a direct effect on taxes now. You're getting the tax deduction on the seed, but you're going to pay tax on all of it down the road.
Gotcha.
Another financial account called a health savings account operates in the same way. If you have a HSA account at your work or individually, high deductible plan that qualifies as a HSA, you can put in up to let me get my numbers right here, $6,000 per person, or $3,500 per person. Yeah, I get it right here. I don't want to be wrong. Sorry about that, folks.
You're fine.
You
have resources.
I've got it all here. I just dropped it out of my head.
Well, I know we'll say, you found it?
Yeah, I
Okay,
got
good.
it. You can, as an individual, you can put $3,550. $3,550 to an HSA account. It's like an IRA. It reduces your income.
Right.
The beautiful thing about, and as a family couple, it's $7,100. You put $7,100 into your health savings account. What does that mean? Well, it will reduce your taxes this year.
Right.
Beautiful thing. Reduce your taxable income by $7,100. The benefit of it, though, is that when you use the money from your health savings account to pay your deductibles when you go to a doctor, and hopefully not the hospital, but that,
Sure.
And things, that money comes out tax-free.
Nice.
And it grows. Once you get to a certain point, many places where you put your health savings account allows you to invest it, and it can grow.
Right.
And you don't have to spend it all that year. It keeps growing and building and stuff.
That's a beautiful thing.
So
Yes.
as it accumulates interest, it's tax-free. You draw it out for medical expenses, it's tax-free. So it's a great way to reduce today's income, taxable income, and get a tax-free benefit.
Right. And I personally have benefited from that. You, at the office, You told us about HSA Bank, and I set that up, and everything I had going in there was taken off my taxes, and that is a beautiful thing.
Yeah, when you get a tax deduction, and then when you use the money, it's tax-free.
Yes.
Okay, so let's talk about the third opportunity here, which is kind of a mix between the two. You hear Roth IRA.
Right.
Okay, Roth IRA has the same contribution limit, $6,000 under age 50, $7,000 a year. However, the Roth IRA is very interesting is that you put money into a Roth IRA with after-tax dollars.
Okay.
Okay, so you've already paid tax on it. You put the money into your Roth IRA, but now it grows tax-free, and when you take it out, it's tax-free.
Gotcha.
And there's no place on the tax return to show you contributed to a Roth IRA because it has no effect on your taxes.
Gotcha.
You're just able to set up this account that's going to be tax-free dollars down the road.
Tax-free is good.
We like tax-free. Really good, yes.
Yes. And it looks like there's a lot of ways, a lot of avenues, opportunities to work with the system as it is in place, legally, legitimately, and yet there are, and I hate to use the word loopholes, I'm sure there's another word for it, but there are ways to legitimately save money on your taxes, invest, and be smart with those tax dollars. We need tax dollars. We need Uncle Sam. We need the IRS. They're not bad people, but we also want to keep our pennies in our pocket when we can.
Yeah, I often tell people the difference between legal tax avoidance through legal strategies and legal tax avoidance and tax evasion is about 10 to 12 years in the county jail.
Yeah, so, that's not a good thing.
We don't want to be there.
Even Hardin County, which we love, we still don't want to do that. Yeah.
So no, there's plenty of ways to be smart about taxes. Right. But see, the thing is, we're talking about funding IRAs and Roth IRAs and HSAs backwards. See, your tax strategy for 2021, this year, should have started January 1st of this year. At the least, when you get your taxes done and you see what the picture was for 2020, you still got 6, 7, well, in this case, 6.5 months to make your plans for the rest of this year. Right. But your tax planning should begin January 1st for that year.
That makes perfect sense.
Instead of waiting and doing everything behind.
Being proactive.
Being proactive. Fund your IRAs, your HSA, your Roth IRAs for 2021 now, because that means they're invested for a longer period of time.
And if people don't know what those are, that is okay. That's why we have folks like you.
Yeah.
Because I've worked with you for 12 years. 12 years ago, I didn't know what a portfolio was. I was happy to keep the lights on with the kids, you know. But in the years I've learned, and you having an open door policy, I'm very fortunate I can walk into your office anytime and ask questions. So I really encourage folks not to be intimidated by the financial jargon, so to speak. That's why we have folks like Steve Wright, so that you can go in, and while you are not a tax preparer, you can certainly help with tax questions, and you have relationships with tax professionals that you refer people to, and they certainly refer people to you. And I highly encourage people to call. My personal preference is Steve Wright, but if you have a relationship with another advisor or they come recommended to you, I certainly really think folks need to do that. It does not hurt to sit down and have coffee and a conversation.
No. And I don't know it all, and I have a rule of thumb. If I have a tax question I'm not quite sure of, I email it to 3 different CPAs or tax preparers I know.
All at the same time?
Well,
do you
no,
blind
separately,
them?
Separately, and get a consensus opinion.
Smart.
In all honesty,
2 out of 3 say.
Rarely will you get all 3 to agree to the same point.
Wow.
If it's kind of on the margin.
Sure.
2 out of 3, I feel pretty good that it's a yay or nay.
Right.
Or yay or nay.
Right.
And the same could be true. I can call the IRS hotline, ask the same question today. Call Monday, ask the same question, get a different person. Call Tuesday, get the same question, different person, and probably get a varied answer each time.
And that has got to be frustrating for the layman.
It is, and that's where people can get into a little trouble. Don't push the edge. Stay within the boundaries. Document. I mean, record your expenses. Have it down. Keep receipts. So that if they do come calling, you can say, okay, I took this deduction because here's my backup. Here's my receipts. They're just trying to make sure that again, I will pay Mr. Uncle Sam and Mr. Kentucky every penny that is owed legally. but I don't want to overpay.
Right. We just really don't want to do what we don't have to do.
Right.
And that makes perfect sense. Let's be fair.
Yeah. So this extension does give you time to do a little preparation, a little extra preparation. And again, if you're behind the ball, you just can't get things together, have your tax preparer file the extension to October 15th.
Okay.
And what that means, you don't have to wait to October 15th to file. It means if you get everything together and it's June 15th, go ahead and send your tax return in. Doesn't mean you have to postpone filing. Right. It just means you have a longer window of time to file and get it all squared away. And again, if you think you're going to owe some, make some effort to pay something in.
Sure.
Or make out a plan with them.
Yes, and even go to the IRS website. There's a form there.
Oh, okay.
Very simple form that folks can pull and put, when they file, put with that saying, hey, I have every intention, I know I owe you, I have every intention of paying you, these are my circumstances, and let's work together on this.
Yeah. And there was a lot of exceptions to require minimum distributions and money last year through the CARES Act, so it's very complicated.
It is.
You may receive some money. You may receive some money you weren't sure is going to be taxable or not, and you got to know how to handle that.
Right.
So this is a little difficult year for filing because of 2020 and the whole circumstance. I think things are settling down a little bit, though.
I hope so. Absolutely. Yes. Well, and I encourage folks not to be intimidated. Ultimately, it is. The IRS was intimidating before, and now it's extremely complicated, in my opinion, because I consider myself a layman. But that's why we have professionals in place, and there's no judgment. It is okay to ask any questions. Just make those appointments, be proactive, and talk to the professionals and get your answers, and you will sleep so much better at night.
Yeah, I prefer talking to live people, not to the computer.
Agreed. I've had my experiences with that, and it was not good. Well, Steve, I do want to let folks know that the Right Legacy Group spearheads a financial advice column in the News Enterprise. It's on the Money page every Sunday and also on their website. And you spearhead, but you write the last Sunday of every month. We do have other local professional financial folks, realtors, banks, those types of things, retirees, giving advice. So I encourage folks to check those out, either hard copy old school on Sunday mornings or online. But look for Focus on Finance, because there's always really good information out there for all ages, from the young folks all the way to the seasoned
and we
retirees.
do a monthly newsletter. I just have a copy here, and we do a recommended reading each month. And this month, quite honestly, it was a book really written by a millennial. All right, someone in their 30s, and the book is called Know Yourself, Know Your Money, Discover Why You Handle Money the Way You Do and What to Do About It, by Rachel Cruz. And if you're kind of getting started in this world and trying to figure out why you spend your money the way you do, or what I need to do to kind of get a path, this would be a good starting point.
Awesome. It's a great recommendation. Every month,
we have
call the Right Legacy Group, go to our website, rightlegacy.com, and click that you want to get that newsletter, and we will get that to you. Once again, old school hard copy or via email, whatever works for you, depending on your age bracket.
Hard copy.
Yeah. All right. I'm afraid we're out of time, Steve.
Okay.
Thank you so much. I hope that, and I'm confident that maybe you've put some folks at ease. It is intimidating, but it doesn't have to be. So thank you for your time. I know you're crazy busy taking care of people, and call the Right Legacy Group if you need some help planning your financial future so that your money outlives you. See you next time, folks. Thank you for your time.